All right, so let's go down the line and introduce you guys. Over there in the corner, we have Tyler Jenks. Tyler's been trading since early, mid-70s?
Yeah, since the mid-70s.
Managed pretty large sums of money back in the day, still today. Still a money manager today. We have Murad Mahmudov, who wants to get into the same business that Tyler's been in for the last 30 years. Tyler's partner in Lucid Investments, Leah Wald. She's representing the fundamental analysis side of the equation, is learning technical analysis now. And we have Ugly Old Goat. And I think it's time for the official unmasking on camera, isn't it? And I'll let you introduce yourself.
I've been asked to reveal myself, and so everyone here and all you Bitcoin standard bears, don't reveal my secret identity, okay? You're not going to know my face, but I'm still Ugly Old Goat, and if you're my friend, you can call me by my first name.
There he is. Now, so some of you might recognize Ugly from the Roger Ver versus Jimmy Song debate on the cruise. He was the guy in the pool that started pointing and screaming and yelling at Roger Ver. Those that remember that video. You know what? Let's start in the corner here. We'll do quick introductions. So Ugly, what is the main reason why you go by an alias and you've been trying to protect your identity?
Well, I have
a little closer into the mic. No. Yeah. Oh, you weren't even turned on. Sorry, before.
Oh, okay. How's that? Well, I have. I was doing this private money thing back in the 1970s when gold was first legalized, and I actually had a company called Gold Standard Corporation. And where one reason I'm in this is because I was doing this, and in that time I was really all alone. I had some big economists like F.A. Hayek and Milton Friedman. They saw what I was doing, and they contacted me. And my mentor was E.C. Harwood, who taught me about sound commercial banking. But I failed tremendously, and I also paid the price. And so I'm either wonderfully qualified or wonderfully unqualified because of my experience. And I think one of the reasons I'm here is I do see what's going on in the ICO world, and I committed the same mistakes. E.C. Harwood, I minted hundreds of gold coins and thousands of gold coins that said, "For integrity, there is no substitute." And I failed. I failed my whole life. But I've been given a second life. And it charged me not to be unmasked. That Tone has known me, and he's known who I am all along. And thank you very much, Tone.
Yeah, no, thank you. And you were one of the first people to reach. You were one of the first people to reach out to me when I started becoming a little bit popular, and you told me your backstory and some of your other writings and your experience as a trader, which we'll talk about. Leah, tell us a little something about yourself, your fundamental analysis background, and what you guys are up to now.
Whew. Okay, starting with fundamental analysis. So I will say that Tyler has known me since he invested my bat mitzvah money back in the day, and that's because Tyler's son and my brother started their first company together at 19. So actually when I started, so I finished business school quite early, worked my first job absolutely as a fundamental analyst, advising some of the top asset managers and hedge funds on Wall Street, specifically focused on Asian equities and global macro trades as a way to analyze specifically what those trading opportunities were and then also how to trade them. So my belief is in the books. I am learning TA. I am terrible at it right now, despite how many times I listen to my partner, Ugly, and attend Tone's workshops. But yeah, that's pretty much how my background evolved in that world, and then specifically how to do LBOs and M&A. So really just also buying out companies, which I would say in this space has been very interesting regarding ICOs and the fact that these crap projects, shit coins, centralized companies, you can absolutely just see through the fugazi, I'd say, with that background. And then also the fun stuff of looking into their books and just how it's absolutely illicit finance. So with that said, when it was the right time to think about price targets, that's where Tyler has advised me throughout my career. And I will actually say this panel is fundamental versus technical analysis or trading. And I think Tyler and I are going to be a little provocative and say that actually, as partners, it's not a versus. It's a married topic. So we'll probably try to play that point. So I'll go there.
That's good. All right, let's thank you for that. Murad, you're somewhat new on the scene and becoming very popular. Go ahead, tell people about yourself.
Yeah, guys, my name is Murad Mahmudov. I am a trader, analyst, researcher. Recently launched my own fund in the space as well. I think the topic of fundamental versus technical analysis is very interesting when it comes to Bitcoin and other cryptocurrencies. Somewhat controversially, I guess, I think the price is arguably Bitcoin's biggest fundamental in and of itself, because I think the bigger the price, the bigger the market cap, and the bigger the liquidity, the bigger the stability. Going forward, at least I think the smaller the disincentives to spend. So the higher the price, the more usable Bitcoin will become as money. So just other than trying to get rich and trying to make money aside, I think price is extremely important. And in that sense, local Bitcoin bubbles act as sort of Bitcoin roadshows and sort of get people in. I also think it's very interesting in the sense that because Bitcoin is simultaneously a money and a payment/settlement network, this is sort of the first asset of its kind where we have access to a relatively transparent ledger where the asset itself is constantly moving. And without going into too much detail, I think sort of analyzing on-chain flows and analyzing sort of the movement of coins on the blockchain itself can shed some light on sort of potential upcoming price movements and the health of the ecosystem in general. And we can definitely sort of expand on that a little bit as well.
All right, and Tyler Jenks.
Thank you very much, Tone. First of all, congratulations on this incredible gathering. The amount of most of us or most of you don't realize how much work went into this. You can picture it because it's so perfectly put together, and I don't mean just the speakers, but all of you. What an unbelievable crowd. When you think of not today, but 10 years from now, what this crowd is going to look like, that's what this first one's all about. It's going to get bigger and bigger. It's going to become more and more Bitcoin focused worldwide, and then we're off and running. In terms of my background, I accidentally got into finance. I accidentally built a couple of companies in finance. I've never been interested in finance, never took an undergraduate course. But when I was exposed to it, I fell in love with it, both because of the fundamental side and the technical side. I started right off on the technical side. I don't know why. I just love the idea of not having to do all the work necessary in fundamental analysis and coming to the same conclusion instantly, and then going back and figure out why did the price do it, and then you get back to the fundamentals. There is no difference between the fundamental side and the technical side, but very few people know that, particularly on Wall Street. When I started back in the mid-1970s, anybody that talked or mentioned technical analysis, you looked at them like they had tinfoil pyramids on their head. And that still continues to a very large extent, which is just silliness. As you'll hear today, we all say it, Tone says it over and over. I've heard Murad talk about the same thing, that all fundamental analysis shows up in technical analysis. And trying to separate the two is silly. They're the same thing. There's identical things. All they are is two different ways of understanding how all of us come to a collective decision about where a price should be. Those of you that think it should be lower, sell. Those of you that think it should be higher, buy. But then if we ask each one of you why, you'll give us the fundamentals. But that's already in the price. That's already moved the price. And crypto and Bitcoin is absolutely no different than any other asset class. If you learn technical analysis, you learn what fundamental analysis does, you can apply it to this area too. So that's been my approach and why I got very interested in Bitcoin back in 2011, and then just fell in love with everything about the space and the people in this space in April of last year.
All right, thank you for that, Tyler. And, you know, as you guys were talking, I realized an interesting, you know, kind of thought. So the previous panel was the VC panel, the long-term investors. It was Stacy, Max, and Trace. And notice how none of them played poker last night, and yet all five of us, the traders, the active traders, were all in the game. So that, you know, that spirit of the rush of like short-term investing, you know, it lives on. Whether it's even if there was no trading, we'd find a way to apply that similar skill set. So Tyler, we're gonna start with you, and we're gonna work this way now. So from fundamental or even a technical perspective, and like when you started trading in the 70s and the workshop that you did here yesterday, like you've done research literally going back to the turn of last century. Most of your work on hyperwave involves charting from the 1920s. So bringing it back to Bitcoin, you've studied like all the markets, just like Ugly here from the 1800s. What does Bitcoin remind you of? I know you weren't there to trade the 1920 market. For me, the only thing I can kind of think of is like oil, something that was worthless at first and then became so critical that the world couldn't function without it. Is there anything else, or you can build on my idea that Bitcoin is kind of like oil?
Yeah, that's a great, there's 3 or 4 great observations there. One is, it doesn't matter if you're looking, the oldest data stream that we know about is for the price of wheat, and it goes back to 1200. And I've gone through that data stream to look at technical things, just to see, was it the same in the 1800s, the 1600s, the 1400s, the same, meaning the principles that we use today in making observations about price, have they changed in any way? And the answer is no, they haven't. That's number one. Number two is, because all analysis of things that we value, if it's commodities, if it's paper in the form of stocks that represent something in the form of corporate earnings or dividends, if it's Bitcoin, it doesn't matter what it is, it matters who you are. It's not the product, it's the consciousness of the individuals that are trying to make decisions about moving out of something, let's call it fiat currency, into something else, where the first thing has certain limitations and you believe the second thing overcomes some of those limitations and give you some advantages. So it's you. It's not the systems. It's not hyperwave. It's not moving averages and RSIs. And it's not fundamentally price earnings ratios or price book ratios or competition or management. None of that stuff. It's your interpretation of the technical and fundamental values, intrinsic values of a thing. So Tone's second observation was maybe Bitcoin is more like something like oil historically, absolutely, or gold historically, or sugar. It has commodity-like attributes, meaning it's a thing easily described. Bitcoin is certainly not easily described to people that haven't tried to describe it to themselves, and you all know that when you try to describe it to a son or a daughter or a wife or a friend, it's a very difficult concept because you can't see it, you can't feel it, you can't weigh it. It's not traded on an exchange that you can, at this point, trust, such as in the stock market where when you see IBM trading at X, you know it's X, and you're not so sure in this space. So it's a difficult space to do analytics on from our perspective, this group's perspective. But that's a very great point. I don't believe that we change as people in terms of what Jesse Livermore showed back in the 1920s that looks very strangely like a hyperwave and very strangely like all of the charts you've seen of what bubbles look like from a human behaviorist's point of view, going from fear to greed, back into doubt, and all the way back down until you just don't want anything to do with it. That describes what I found with this thing called a hyperwave. But what I'm saying is that was 100 years ago. Read about Jesse Livermore and see what he did, the mistakes he made. We heard Ugly Old Goat just say, you know, he's made a lot of mistakes. Well, welcome to the world. Every one of us out here have. That's who we are. That's what we do. We take wrong turns. We make bad decisions. So when you apply that perspective to something like Bitcoin, like cryptos, like the crypto market and this war between Bitcoin and everything else, you have to decide where you come down on that. And what I love about this conference is we know that most of the people out here understand the difference between this thing called Bitcoin and everything else, and almost no one else in the world does. So,
no, thank you for that, Tyler. Let's move on to Murad, and I have a different. So I'll have different technical analysis versus fundamental for you guys because I'm very familiar with all of your backgrounds. So the one thing that it's actually impressed me about you is that you're coming into the space, recent college graduate, finance, a little bit of trading background. And the one thing that's impressed me is you've reached out to, you know, the well-known and respected traders and analysts in the space, and you have been working with them over the last, what, year, 2 years? About that. What have you learned, and what's new on the horizon from the fundamental side? Because I know you've worked with Willy Woo on some of the NVT fundamental analysis. And is there anything else? Like, because Bitcoin is both you know, a new asset and its own payment system, there's new fundamental analysis that is there that no one has yet discovered because we've never had an asset like this. And where do you think it will be?
Yeah, definitely. I consider Willy Woo as one of my mentors in the space. I would definitely encourage everybody to familiarize themselves with his work. Also recommend work of David Puel, Nick Carter, and Dmitry Kalichkin, and a couple of others. Sort of, we've all been working together to try to come up with new indicators. Just with respect to technical analysis, I think because there is no specific formula to value Bitcoin and other cryptocurrencies, coupled with the fact that the retail participants still arguably represents the biggest fraction of, like, among all market participants, I think trading in general is about taking advantage of certain local market distortions, and technical analysis is about finding patterns in sort of collective unconscious, so to speak. And I think because retail participant is the biggest participant here, and there's no set formula or any kind of methodology or framework to value these assets precisely like there is in equities or bonds. Emotions are particularly pronounced in crypto, which I think is why, at least for the time being, for maybe 2 or 3 more cycles, I would argue that technical analysis is a little bit more useful in this, is even more useful sort of in this asset class than it is in others. But personally, I don't like to trade off of TA alone. I always like to merge sort of TA and sort of on-chain fundamental analysis, looking at on-chain flows, and only put in trades or even medium-term investments when both of those align. So for example, one new indicator that we have been looking at recently is to try to see when, after the market bottoms, when and how does accumulation for the next new bull market begin. And something interesting that I would encourage everybody to look at is to divide the trailing market price on exchanges by the on-chain volume. And for example, if you go on and sort of draw this indicator, you will note that it will not help you catch sort of the knife bottom or the final capitulation exactly. However, it will tell you when, say, 1 or 2 months after that happened, when the final accumulation is going on, when sort of quote-unquote value investors are stepping in and sort of the coins are getting consistently transferred from weak hands to strong hands to sort of prepare the next bull market wave. And in this particular indicator, for example, you would be looking at a situation where the price volatility is very, very small, but the on-chain volumes are particularly high. And this combination together would sort of give you that band and signal that there's a high probability that accumulation is occurring in this particular range.
All right, awesome. Leah. Oh, grab that one. So, slightly different question for you because you've spent time working as a fundamental analyst for a financial institution. And so what do you think is going through a lot of financial institutions' mind, because they're not used to this kind of analysis that Murad just described. They want to know like the price-earnings ratio and like Sharpe ratio and all of these other things. So how do you think, and who's going to analyze it for them? That's the other problem, right? Who do they hire? There's no one that they can find that has experience that actually wants to go back and work for the financial institution, right? Like once you come into the crypto space, you pretty much stay here. And that's what happened to you, right? Like your job wanted you to start researching Bitcoin and blockchain. You went to Tyler, and then next thing you know, you're gone from that company. So how do you think they are managing this, trying to understand it and figuring out what they should invest in or how they should invest in that?
Yeah, it's the answer that I believe everybody in the room doesn't want to hear, but stay away. Stay away as far as you can. Don't touch it. I mean, the most recent news was that, right, Van Eck and the ICE, right, which owns the, that they just pulled their ETF, right? I mean, from every single fundamental perspective, this space is dangerous, doesn't look good, especially with the price. I mean, in our current price market and price action, there's no reason to actually jump in now. I truly believe that there will be an amazing time. Tyler and I recently wrote a piece where we do believe that it's possible to hit a $10 million Bitcoin. That the desks, the trading, the prop decks that actually were set up at Goldman, at a lot of these large institutions, Fidelity was mining almost 4 years ago. I mean, a lot of institutions, a lot of big players were in the space. I mean, they were very interested, they were taking note, but none of these fundamentals make sense. And this is something where we disagree a little, sorry, Murad, which is that they also can't trust the exchanges. So where do you even start from a fundamental perspective when you can't even trust the numbers that are coming out? Now, from a TA perspective, and you want to trade on it, and you're following the price action, this is one thing, and you absolutely can trade on it. But from a fundamental perspective, you can't even, to Tone's point, create these ratios that you're looking at. They don't exist. I mean, and you can't trust it. The SEC, and the rest of the agencies, the alphabet soup here in Washington, D.C., or I'm from D.C., are diddy-bopping. They haven't put any firm rules and regs yet on the space because, very honestly, they don't understand it yet. And it's because it is confusing, right? And so until these things, until these projects get deemed illegal securities, until this space and the media as well can start to differentiate between Bitcoin and the rest of the cryptocurrencies, then this space is still going to look not just incomprehensible about how to make a prudent financial decision, and again, let's not forget that large institutions, large money managers, large institutions, activists investing hedge funds, they're beholden to other people, right? It's not just one person who's saying, all right, I really like this, let's jump in right now. No, there's LPs, they have a lot of rules and regulations around fiduciary responsibility if we're talking about asset management. But also, who wants to be caught on the wrong side of the law when it's not defined yet, right? So from a lot of perspectives, yeah, absolutely, I would stay away. The one thing that I do find interesting regarding what these institutions are doing that Giacomo was, we were talking about, because I'm writing a new Forbes piece on it, was crypto as an inspiration, where he was saying, and I find this very interesting, that you can bucket, really we were talking about how do you want to bucket what businesses entering the space see crypto as, and how do you ensure that actually you're staying on the right side of the law from a financial institution perspective, so if you're launching a financial services company in the space. Now, crypto is an inspiration, crypto as a standard. If you do believe that, and we do, that that Bitcoin specifically will become the de facto standard in the future, then you do want to in certain ways get in now. Now that doesn't mean that you should be putting your money into it, but understanding the underlying tech. And again, crypto is an inspiration. What we were talking about and what we mean by that is that the underlying technology may be of interest to what your company is doing from an OTC desk, from financially trading. And it's unregulated now, but if you do believe that it will become the standard in the future, if we do believe that it's going to be a $10 million Bitcoin at one point, people in the fundamental analysis, I just should say, traditional markets world are absolutely taking note, but right now, absolutely stay away, and I think that's absolutely the right decision, and that will be affecting price until we can reverse that, and it's up to us, actually, I do believe, to make that reversal happen.
All right, awesome, thank you. All right, Ugly, we're back over to you, and this is, again, it would be interesting if you see your style of trading as more of a technical one or a fundamental one, because I think it's a true combination of both. And just so you guys know, one of the reasons why I became very familiar with Ugly's work is because he's probably one of the best traders I've ever met. And I've seen what he did with his very first few Bitcoins once he was able to trade again in this unregulated market, and you legitimately built a giant trading account out of almost nothing with your skills from trading from 70s and 80s. So my questions to you are, your style of trading, what would you call it, fundamental or technical? And you can describe your style of trading. You do spread trading on basis. And also, you learned that long before Bitcoin, long before the internet. So how do those skills transfer? Like, if you're a good trader in the past, this is another asset, and those skills fully transfer over, huh?
What I learned was 40 years of experience and 11 years in federal prison. So I think that teaches you a lot.
No, closer to you. Closer
okay, how's that? money management trumps fundamentals and technical. If you don't have money management down, that's the only fatal mistake you can make. And you have to and it's hard. And like I say, I don't want anyone in the crypto world to go through what I went through. Fortunately, they raised enough money that they'll probably defend themselves and pay little or next to nothing. But this is what we're here for, and this is what we need to correct. That said, I just did a brief article about fundamentals, and my view is fundamentals trump technical. Money management trumps fundamentals. Fundamentals trump technical. The fundamentals are Bitcoin is the Bitcoin standard is the only one that meets the criteria F.A. Hayek standard. F.A. Hayek wrote me, and when I was doing, I was trying to build a gold standard on a free market. And it wasn't until I actually went back and I remembered an old article from the 1985, and he described, I never really understood why he was talking about this basket of commodities. And because he realized that there's not going to be competing standards per se. There might be a few competing standards, but the competition is going to be within the standard. And that's what's going on here. And that's. And then the third thing is, and here's the fundamentals. I keep it simple and stupid. My outreach is, not to the ivory towers, but to the blue-collar entrepreneurs. And I define it, there's two types of entrepreneurs. I'm a entrepreneur with Bitcoin, but 99% of the entrepreneurs out there are entrepreneurs without Bitcoin. And that's the fundamental for Bitcoin. That's where we have to go. We're not going to bank the unbanked. And other things. Bitcoin, let's look at the real fundamentals. The real fundamentals, and this is almost heresy when I say it, and I know I drew a lot of attention, but Bitcoin is lousy cash. And it sucks as a store of value. And all you got to do is, I built a new little factory building for $200,000. We found a wonderful builder down in Ensenada, Mexico, that built it for us. And I just asked him the question because he'd done a lot of work for us. I said, Armando, what do you have that can't be confiscated? What do you have that you can't be taken away from you? And he started thinking about it. And, he said, well, my car and my truck, my house, my family, and, one by one, everything got knocked out. And there was only one thing that was left. And that's how we teach people about Bitcoin. A light bulb went off. And I persuaded him to take 15% of the cost of that house in Bitcoin, when Bitcoin is $12,000, okay? Now, is it a store of value for him? No. But he does have something that can't be taken away, and and it was sold to him on that basis. Now, I haven't seen Armando for a month or two. I don't know what he thinks of me now, but I'm sure he's a great guy, and like I say, finding people to do business with, in the Bitcoin community. I mean, let me go back to my number one mentor, and that is E.C. Harwood. For integrity, there is no substitute. And that's why, I don't know if you listen to my question. I don't understand Lightning Network, and I'm not sure that it's necessary. Persuade me. Murad, please do an article on Lightning Network. You said that you would. And this guy's come up, I don't know if you saw his chart, but he has a beautiful chart. And I mean, that's the same vision that I have. It was so easy to embrace and to get excited about. But the reality is, Bitcoin's not there. It may never get there. It's not cash. It's lousy cash, and it's a lousy store of value. But it does give us, it is secure, okay? It's borderless. And the one I like the most is it's unconfiscatable, okay? Those are the fundamentals. And the technical are just, is simply things that Tone can teach you. I can teach you to some degree. Tyler can teach you, and a lot of people can teach you, but you have to really kind of learn it on yourself. The fourth fundamental is really you. And I think that's what Tyler was talking about. You're the fourth fundamental. Where do we go from here? I don't know. You know, I can give you, you know, my views of where the market is. I don't know where the market's going. I'm the last to now, you know, when somebody last night asked me, where's the market going to be next year? And I said, well, that's really not a good question. He said, well, I'm just trying to make conversation. I said, I know you are. I didn't mean to, but that's not the right question. Now, if you want to ask me where I think the price will be tomorrow, or, you know, but to make a forecast, nobody knows. And so all of my trading is based on the idea of ignorance, okay? And it goes back to that number one thing, which isn't fundamental and it's not technical. It's money management.
Yeah, awesome. That's great. And thank you for that, Ugly. And that skill set really does transfer. I mean, he's being modest, but that $200,000 factory, that was due to being a skilled trader and good money management, not from being an early Bitcoin adopter, the majority of that.
Yep, that's true. I mean, I bought my first Bitcoin in August of 2013, and I had a small business heavily in debt, and I saw this thing, and I bought it on Coinbase, and the way I bought it was overdraft protection on my credit card. So.
And then you started trading it.
And then I started trading it. That's correct.
Yeah. So, Tyler, do you have anything to add to what Ugly said? Maybe you disagree with him on something, or you want to add to it? You guys have been trading for about the same amount of time.
Yeah, no, I certainly wouldn't disagree with anything he said. I'll give a little bit different perspective from someone who gradually got into a position where I was taking fiduciary responsibility over other people's money. And the law requires someone in that position to use money management. It's not a choice. It's something you have to do and you have to learn in terms of the size of positions you can take, what kind of things you can buy, how often you can trade, what sort of costs you can incur on the part of a third party. That's what institutional money management's all about. And you can get very sloppy because it's so easy. What I mean by that is this theory that I have of hyperwave told me back in late 1999 going into 2000 that we were going to get a crash in the dot-coms. And most of those dot-coms, of course, I could not own for my clients, who were very large institutional pension funds, because even though I wanted to, I couldn't. Just like even though I want to put in Bitcoin at the right time, at the right place for clients today, if they were institutional, I could not do it. You cannot put Bitcoin into retirement accounts. Even though some of you, many of you think you can, you cannot. And a day of reckoning is coming in that area. But what I'm saying, there are laws and provisions and regulations written for money managers which can make all of us look very stupid or very smart. Very stupid when you're in a bear market because you are not allowed to sell anything. The pension funds that you have with the corporation or the U.S. government or the state of California never get out of equities, even though it's obvious that we are in the beginning of a bear market and we could very well lose 50%. If you take a look at the 20,000 mutual funds that have $23 trillion in it, don't pretend to believe that the manager of that is going to protect you from a bear market. He can't. He's not going to try, and won't even attempt to talk to his colleagues about what should we do about this asteroid that's about to hit the Earth. The answer is they can't do a thing about it. So gradually I got out of that business through pure frustration because I knew what was about to happen and couldn't do anything about it. So I set up what Lee and I do now, where we have the ability to do anything we need to do anytime we want to do it. So that's wonderful for me. But what Ugly was just saying is he sort of ranked technical, fundamental, and
money management above both of them.
Money management is number one. And I would do the same thing with the provision that you have the ability to do anything you want using money management tools. And you assume that all these Wall Street types are doing the same thing. Therefore, I put money management, unless you are taking the responsibility yourself, at the bottom of the pile, not at the top. If you learn money management tools from people like the people that are up here, and all of us talk about it all the time, it becomes far and away the most important thing you can do. It doesn't matter if you make a bad trade, as long as you knew it could be a bad trade and you protected yourself against that eventuality. Stop losses or getting ready to hedge, all of that. You're going to make approximately 50% of your trades are going to be bad, meaning it didn't do what you thought it was going to do. But that has nothing to do with making money. That has to do with putting yourself in a position where you let your emotions overrun, you get scared, and you don't try another trade. Because you let that first trade get away from you, and you said, it's only down 5%, I'm going to add to it. Or, oh my gosh, now it's down 15%, I'm going to wait till it comes back. And it's that simple. It's a mechanism that you use to control your emotions. And if you do it properly, Ugly is exactly right. It will keep you out of bad trades and allow you to stay in good trades for a longer period than the period that you were in the bad trade. And there's a definition for that: profit. And you can do it over and over and over again.
Thank you, Tyler. Thank you, guys. All right, we're about 5 minutes over on time. Let's just do closing thoughts, Murad, and then Leah. Just anything else you want to say really quickly, and we'll let you guys ask questions during. All of us are going to be on stage again at 5 p.m. So we'll definitely save room for questions there. There's only so much we can talk about where the price is going. So you'll all get a chance to ask a question. And the chart that I think Ugly you were talking about, or Tyler, you're talking about Murad's chart. That's pinned on his Twitter profile at Must Stop Murad, where he talks about where Bitcoin is on the evolution of being global money.
Yeah, so just to add a little bit about that, I do agree that technically Bitcoin is still not a very good cash nor a very good short-term store of value. However, I would say that, one, I view CoinMarketCap as the market capitalizations of different cryptocurrencies, to me, are like a giant prediction market, where the relative market capitalizations represent markets' perceived probabilities of a coin eventually becoming the dominant money of the future. And I think in that sense, one could argue that Bitcoin is still undervalued and almost every other altcoin is massively overvalued. Now, once again, the chart that I drew was sort of just a visualization of some of Nick Szabo's and Vijay Boyapati's writing. And this is a very, very oversimplified sort of description. But I believe that Bitcoin right now is like a digital collectible. And it's, I think, maybe 2 or 3 cycles from now, it will mature into a much more robust store of value. And then maybe a cycle or 2 from then, it will become increasingly useful as a medium of exchange, etc. And I think that even though it's not perfect at those functions today, I think we're still extremely early. The market is still extremely immature and inefficient. I think fundamentally, Bitcoin is superior to fiat currency and to gold. And I think the extreme volatilities that we see is simply the world coming to terms with those facts. I still think Bitcoin will grow in these bubbles, and it just takes patience and it will take time. We're only 10 years into what could be a 40, 50-year paradigm shift in the very idea of money. So we need to sort of think in a very long-term way and have patience.
Awesome. Thank you for that. And last but certainly not least, Leah, give us your final thoughts.
Yeah, thanks, Murad. People are the soft tacos of the bear world. And I say that because we are absolutely in a bear market. We have been a bear market. Tyler and I believe that we will continue to be in a bear market, so does Stone. And this is actually the time to wake up, and not be complacent. And there's a lot of dangerous things happening right now from traditional markets. We're looking at a potential recession. It's very frothy. When we talk about the future of Bitcoin, there's a lot of things that may hinder its future, absolutely. I mean, it's not unspeakable at all to think that we will potentially overnight go back into a gold standard. I mean, when the gold standard was established in 1944 at Bretton Woods, it only took, I think it was 27 days or something, Tyler. 22 days for the entire world to go onto a gold standard, okay, and really backed as well by the United States dollar. Okay, and so we don't think potentially that we could, make that work overnight right now with the type of governments and control that we have in place. And as Saifedean was talking about earlier, if there is one thing that could kill Bitcoin, it would be a gold standard. Now, with that said, let's not all just think that the future is absolutely going to be a $10 million Bitcoin. But the thing is that it could be. It can be. Now, we need to be cognizant of all the different challenges that we're up against. But what congratulations, Tone, on organizing this. What we have in this room, and why I'm so, on cloud 9 since I've stepped in Vegas, is that, you guys are absolutely brilliant. We believe in Bitcoin. We understand Bitcoin. And its future is brilliantly bright if we really do work together and make those beautiful fundamentals known, understood. And then, from a finance perspective, because I guess I'm on a finance panel right now, there will be a layering effect, and a layering effect that's necessary of who comes in first to really ensure that that price rises and we reverse into a bull market. But it won't happen overnight, and it's not just us in the room, shuffling between each other with our trades. There is a necessity for institutional money to come into play. There is a necessity actually for regulated exchanges. I do believe there's a necessity for laws to be in place, and I do believe that the barnacles of altcoins need to go to zero, and hopefully tomorrow. As soon as possible, I believe that the barnacles and the shit coins go to zero, that Bitcoin will be able to continue to rise. So there's a lot at play here, but for that reversal, we need to be cognizant of what we're up against, but that if we look around the world, around the room, and therefore in our nicely global tech world that we also live in, work around the world, we can actually change this. I truly do believe, and little by little, I do think that capitulation will happen and that we could reverse into a bull market, but we have to keep our eyes open.
Very well said. How about a round of applause for the entire panel?